The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. It is my pleasure to be here. To be here on this. Again. Just trying to get the charts. There you go. On this Monday, this is Boston Marathon Day. I haven't really kept up with it ever since they've changed the time to very early. When they used to start at noon, I'd be able to finish my shows and get out there and see. It's just about half a mile away, Commonwealth Avenue, just before Heartbreak Hill starts. So this is April the 15th. I'm not going to mention what else is going on April the 15th, but most of you know. And let's look at the market. Dow is down 76 at 14,787. S&P is down 10 at 1578. Now this is going to be very interesting. The QQQ, that's based on the Index 100, has made a pattern with a stochastic at 90% and the MACD still very strong, that says there is a chance that as soon as the selling is over, maybe later this afternoon, maybe this morning, if the Dow doesn't close down 135 points or more, there's a chance that if the Qs are able, now this is going to be really interesting, because the Qs now are only down 0.54. That's the same as a little more than the Dow in percentage terms, but less than the S&P, which is down 0.66%. If the Qs this week are able to break above 70.17, that will turn into, I'll have to call it a leg B. So this is going to be very interesting. Why? Because under this tremendous pressure of selling, and I'll go right there now, because gold, the gold contract, what happened? I don't have all that information in front of me, but I will get it right now. Give me 1 second. Go right to there, and we'll be able to see. Give me a moment. I just want to get it exact. Gold's down 117 at 1365 in the futures. That is a whopping. We spoke about this on Friday, and I berated myself because I promised that I've got to stay with the trend, and the trend, in fact, for gold, as I've been talking about it for ages and ages. Go GCM13. I'm a little behind. 135. So this is a little behind because it's bounced back a little bit. This is the gold contract. Now, what you can see is in a bear market, and this is a bear market, the prices absolutely take out the left side highs on the climb to the upside. In just a normal consolidation, you get that arch formation. Prices go up and down in about the same time to the top. Always love to emphasize that. In a bear phase, it is, you can even have a limit down, just like you can have a limit up. And this is saying to us that the whole, remember I was talking about it, I said there are a couple of, this is about a year or two ago, I said there are a couple of new gold selling places, those sell gold here, those big signs. And there's one in particular, which I'm not picking this one out in any way. I'm just saying this is one that I drive by very often. And it's the one that was the most recent one to open. And I said, when the for rent sign goes up, I'll know that we're close to getting, or we will have made some kind of a low in gold. Until then, this is going to be a bear market. Even if there's a fabulous bounce coming in the next, who knows, maybe 100 points or so to the downside, I think gold is in a bear market. I don't see anything in gold as other than trades for the upside coming until, I would say, the end of the summer. Maybe at the beginning of the fall. I just don't see it unless certain things happen spectacularly all in a couple of days. But this is what you see. As I said to subscribers this morning, when they shouted fire on the opening on Friday, and they had only one door open, this is what you get. Just the squeeze continues, and that's what we're seeing in gold. Now, normally you would see an impact with the stock market pulling back really sharply, and in this case, I have to tell you, I don't even want to say it, but I'm kind of impressed with the action thus far. Obviously, the day is young. By the end of the day, I might not be that impressed. But there are buyers, and I'm going to go through that in a short while. But let's just go on. And thanks, Steve, for 2 great hours starting us off this week here at TFN. We have programming right through the day from Eastern Time, from 9 in the morning until 6 in the evening, where Tom O'Brien wraps it up. Straight after me comes Larry Pesavento, just, fabulous technician. We've got great technicians all the way through. Look, you got Larry. Then you got, and this is kind of new to TFN, about, a year now, I think it's over a year. You've got Daryl Martin showing a different way, coming up on May the 11th, here, Saturday, May the 11th, here in the Boston area, actually in Burlington. Tom and Daryl will be giving a free workshop, 4-hour workshop. Should be fabulous because Daryl's produced some very, very interesting technology as well as techniques. So we'll be, hopefully you'll be able to get to it. Go to the front page, because I'm sure that's going to be, I'm sure that's going to be sold out. So, I wouldn't sold out. It's not the word. Filled up. So go to the front page of TFN. Now, let's go through some other things. So gold, huge decline. Look at this. Silver, SIK. SIK, whoosh to the downside. You've got copper, HG. I'm going to go to the M contract for now. Push to the downside. So this is not a great sign in terms of the economy, because I want to see high-grade copper not at 3.2, but at 4 or 3.90. So this says be careful. Now, in terms of the cycles, if there is no new high this week, then what we're looking at is the SPX.X, that's the S&P, is making a peak D. The technicals are still at 92% in the stochastic weekly, 88% in the daily. Even with this, the technicals are still very strong in the daily. I have to say that there are certain aspects of this market that are extraordinarily impressive. But there's a freight train. The freight train's moving very quickly. And it's very selective short, selective longs. And the most important thing that you can be looking at right now is, how do you consider stocks as long positions? How do you consider stocks as short positions? And I think a mixed portfolio right now is an ideal way to go. So let's go on here. I want you to also do the bonds. So bonds, TLT, is up. The TLT, the Lehman 20-year Treasury Bond Trust, is up a whopping 22 cents at 122.15. You would think that bonds, USM 13, bonds would be up more than 30 seconds. They need to get to leg D, the actual bond contract itself. This is the June contract. Needs to get to 148 and 10 seconds for leg D, and it's only 147.21 30 seconds. As I say, the day is young. Anything can happen. But boy, something's wrong with this picture. Now let's go to the dollar, DXY, dollar index. Well, if I said to you that very often there's an inverse correlation, that when gold goes down, the dollar goes up. When gold goes up, the dollar goes down. That is not historically a fact. It is just a percentage of the time, and it's, in many cases, it turns out to be a good percentage of the time. Well, if I said to you that gold was down over 100 smackers, and where would the dollar be? Would you say that the dollar index would be down 8 cents because it made a rogue wave peak G the other day, failed, and that says that 9-period moving average, which was fantastic support at 82.45, now, where it is right this moment, that's the level to break to be able to go above it, and it couldn't even touch that line today. The dollar index is at 82.25. Hey, listen to this. EUR, USD, the euro-dollar currency pair, has made a peak. And you know what? This in some ways replicates what I'm looking at a little bit in the market, in that the euro is holding very well in a leg. I call this leg A, but it's about the 1, 2, 3, 4. It's the sixth time we've had A in quite a while. And that says that there's a chance that the euro, if it breaks above 1.31375, I hate all those numbers, it's at 1.308 right now, will very quickly try to test 1.316. And if it does that, then the candle I'd be looking at was the inverted Roman candle of the 25th of February, and that has a high of 133 and a low of 1.30. That's the candle, and it's the body that I'd be looking at of the candle, and that's at 1.32. That would be the target. Now, on the downside, the moment the euro breaks under 1.30, then the 9-period moving average once again becomes very strong resistance. And the USD JPY, I think we've covered just about everything. Oh, I wanted to cover the housing sector. And the USD JPY, the US dollar Japanese yen currency pair, holding above the 9-period moving average, stochastics at 90%. A lot of these things are saying at 90% you would expect some support, and they are getting the support. But it's a huge move up, and I've got like a peak F in the 6th highest peak in the monthly, unless it's recycled. So I'm going to be watching that really closely. I was asked about would I look at, yes, I will cover the VIX in a moment, but while I'm thinking about it, because I'm bound to forget, there was a question in the den of whether I would look at coffee, July coffee, KCN 13, and this is what I've come to the conclusion with oops, wrong KCN 13. This is what I've come to the conclusion as far as the coffee is concerned. It's been in a huge bear market on the monthly. The weekly has 141.04 as the level to break, to even start a rally, because that's the 9-period moving average, as it's been above only twice in the past, well, since October of last year. It's at 134.35. I'm not sure if you talk about 1.34, if you actually say 134, because I don't trade this, down minus 2.80. I don't think it's going to make a low yet until there's an inside track, and I'll draw it right now to show you the techniques that I use. Go the red, make that green, and this is where it had better right there. So this is a line that I call an inside tracks technique that I teach on my CD introducing the ChapmanWave methodology. And that says that coffee is coming into an area that it better hold, although the stochastic and MACD says it might not. And it's in the area of between 1.3068 and 1.32.36. So it's within 2 to 3 points of trying to find some kind of a bounce low. But as to a major turn, I just don't see that yet. I'll be right back. Basil Chapman, and I'll talk about other things in the den and big questions straight after this break. The Dow's down 90, S&P's down 12.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
I run Basil Chapman, Tiger Technicians Hour. Dow's down 87, S&P's down 12. Now, this is going to be very interesting. Crude oil, mentioned the den. Yes, crude oil. Look at this. Crude oil is down. I'm using the USO, if you don't mind. I'm using the USO. That's just the best way that I can do this. And it is the United States Oil Fund. It is down to 31.61. It has broken a trend line that I had drawn in some time ago. Oh, isn't that interesting? I was experimenting with the Gartley pattern a while back. I forgot all about this, and I had drawn this in. And it looked absolutely ridiculous because the prices, it was in the 34s, and I had this down at 31. Well, lo and behold, that's the pattern that I drew. Now, so I'm not sure it's exactly right, and it still looks weak because the MACD and stochastic are still very weak. So I'm looking at USO possibly testing very key support at 31. If it breaks 31, then the low of the 29th, the week of the 29th of June at 39.02, that's going to be the target. Now, I had another question, and then the VIX. So did I do that? Yep. The volatility index, VIX.X. Now, this is going to be key. It's only, I say only, up 1.02, up 8.46%, but I'm saying only in relation to all the other moves that it's had when there's been hysteria in the market. This makes me a little nervous because I would have liked to have seen it much higher at this particular point, with room to come down over the period of the day if the market happens to start rallying. But if it fails to rally, then what we're looking at is a situation where that is, the market fails to rally, then the volatility index has quite a bit of room to go at 13.08. 15.68 is the 200-period exponential moving average. It hasn't been able to significantly close above, except for 2 days back in late February, where it spiked up and then came straight down. So I'm going to be watching this one closely. Now, it's very interesting because in my work, what I'm really looking at is there's a chance, and I really give it more than a 51% chance, that there's going to be an attempt to move to higher highs. And I'm thinking that that's going to continue into next week. I'm going to be completely wrong if the Dow just completely slices right through support in 14,690s or something like that. Just goes right through to the downside. But there's just enough evidence to say, to really fool the bulls and the bears. If there was a move higher, even if it's very select in the general market, and some stocks are holding really well right now, but this is right now, if there is a move to the upside and is able to garner some kind of conviction, and we are able to just make nominal new highs. Remember, I spoke about this, showed my subscribers this in great detail. There's a trend line resistance right here. Excuse me. And that trend line resistance says that we should go to a leg D. And this could be a G, but it's, I don't know, it's just, everything about it says that it should go to one more nominal new high, and that should be about 14,887. But at the same time, and this is going to be the interesting thing, the S&P in my work, SPX.X, is ready, because this could well be a peak F top. And with the stochastic at 88%, well, of course, that could change by the end of the day. And the MACD is still good. Something's wrong with this picture. And it says that the weekly chart is still so strong that it's going to take a big slide, and a slide in the S&P below 1563, maybe 1560, and that'll negate upside activity. That's the way I'm looking at it. But if by the end of the day, and I said to to subscribers, in fact, we added a couple of long positions today, really good-looking stocks. They might not be so good-looking at the end of the day, but there are a bunch of shorts that are stocks that could be potential shorts. And if we do turn around, there'll be time to get those shorts. I don't know if you actually have to rush in, unless you're timing things to the exact turnaround. Now, here's the other thing. In the S&P, the 120-minute chart, I haven't finished that, went to A, B, C. I was looking at this yesterday, I think it was. I forgot to actually notate it. The 120-minute chart of the S&P, I just want to double-check because I don't like to have anything. I don't want to say something if it's incorrect. 88.51, 88.85, 89. Yeah, this is actually leg and now peak C. So it would be unusual to have bought in the 120-minute chart at a recovery high at a peak C in the 120-minute chart. That is my thinking right now. So I'm still in the camp that says I'm getting more and more worried about a very sharp decline, but I just don't think that my indicators have yet given me any, I don't see it, anything that says we're going down now for a 400 or 500 point pullback. I think that's coming, but it's a little later, and it'll probably be much more in points. I'll be right back at 877-927-6648. Basil Chapman, Tiger Technicians, Dow's up 86. Down 86.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tag Technicians Hour. Let me just repeat, my bias right now is to be looking for, even if they're nominally higher prices, could be totally wrong, but that's just the way it is. But it's a very diverse market, so selectivity is absolutely the name of the game. I was asked about, I did it before, maybe a person missed it. I was asked about bonds. Yeah, bonds need, look, they're only up 330 seconds. Bonds need to get over 148 and 930 seconds to start leg D. The TLT is already made peak D, and it's got the falling axe formation. So if it doesn't rally, if the TLT doesn't rally above 123.43, this is going to say that money is staying in bonds, but not really, more money is not coming in, and it's not a fear factor yet. My bias is still to say that stocks are the best looking thing out there. Not everything, but there are groups and there are certain categories of stocks that are actually acting really well. So now let me just do this because I think I promised for 2 days to do it. I never got to do it. We had a bunch of calls. I still want to take calls, but let me just do this. GMCR. This is our Investors Business Daily, and this is their top. I'll just go through out of the top 50. I'll do a couple. So GMCR has made a peak C. This is Green Mountain Coffee Roasters. I can't believe I'm even talking about this because it hit a high of 115 back in September of 2000. Remember, it just kept going and going. And then it plunged down to the 200-period moving average of $17.11 in July of last year, and now it's right back at 55. Pretty good. But it's getting a little toppy here, so I'm looking at it and I'm saying, I don't think that this is going to go much higher. That candle, the long-legged doji candle with a high of 59.30 on the 1st of April, that's saying, hey, you might get into the body of that again, but I'm not sure it's going to make new highs. I think the weekly is saying great action, needs a little time out, but it's still acting very well. FLT is Fleet Core Technologies, and Fleet Core Technologies, which I thought I'd finished, which I haven't finished, has made a peak D in the weekly, peak D in the Plantronics, PLT. I hit the wrong button. I do it. Serendipity always plays a part in my analysis of looking at stock. And it's holding quite well, Plantronics. I meant to go to FLT because that's the one that's number 2 on the list. I made a peak F top just the other day, and I think it is due for a little timeout. Now, I'm going to put the down arrow because I have to at that point. That was the high of the 10th of April. But it's holding really well with a high-level consolidation. But I've got it as probably a peak F in the weekly if there's no new high. An unbelievable move in the monthly. Only leg B. This is a great-looking stock looking out. I would love for this thing to come. Those payment products for the oil service industry. I would love for it to come back to the 71 to the 67 area to consider whether or not it's a buy, because that's where it would be. And Celgene, just an extraordinary, look at the Celgene. Today, down day. Come on, Celgene, what are you doing? This is either F or B, peak F or C. So that's the daily. The weekly is in leg E. You see, a lot of these stocks have reached the upper limits. There's one that has done the 268%. I wonder if I'll find it because I don't remember what it is offhand. And I'll try to find it later today because that's going to be very interesting where that one goes to. So this is what I'm looking at. In the Celgene core, therapies, cancer, immune, inflammatory diseases, etc., this is a strong leg F to the upside. It might be B because the stochastic's only at 96% and the MACD is very strong. I'm calling it F/B with an emphasis on F right now, and an E/A in the ChapmanWave methodology in the weekly. Nothing wrong except the unbalanced volume is saying you're getting a little toppy. And I'm anticipating that Celgene at some point is going to pull back from 122.70 down 27 cents with a doji candle and a possible F, but it becomes a C if there's a price move above 124.10. So nothing yet to say go short Celgene, one of the best, one of the top 3 stocks here. And Lumber Liquidators, LL, trading down 131 at 66.93. /F/B in the weekly, leg F/B in the monthly. Lumber Liquidators, bargain lumber products. Nothing wrong technically in the monthly, but the weekly is saying be careful here. There's a good chance that there could be some kind of a consolidation. I would anticipate 66.93 right now. That a move to the 57 to the 55-ish area is coming over the next month or so, but that only will happen if it takes out 63.88, the low of the 5th of April, and it does it within the next, I'd say, 3 sessions. Because if it holds and it's starting to push back up to 70, everything's on hold. And I've only got a peak C in the daily. Now, let's do a couple of other things. Just one quick one, and then we're going to go to callers. PRLB. And that is Protolabs. Had a spectacular move. I've got it as a peak. This one really looks like a peak F in the weekly, leg D in the monthly, with a huge long-legged doji so far this month. And there's a spiral up last week, was it the 10th? On the 11th. And that was at A, B, C, D, peak E. So this is in a consolidation already. So I'd be careful with Protolab because it's had a spectacular move. It needs a consolidation. Let's go to our caller online. We've got Mark in Denver. Hi, Mark. How are you?
Good. How are you, Basil?
Very well. Thank you.
All right. So I remember in your report maybe a week or 2 ago, you were talking about EOG.
Yes.
So I was kind of watching it, and it looked like we had a little failure several days ago. So I bought.
Correct.
I bought some puts. and I'm at a double. I took half off, and I'm wondering if you think it's got much more room to go down.
Folks, we're looking at EOG Resources, oil and gas operations. It's 119.01, down 5.12, down 4.12%. First of all, congratulations on two things. Congratulations on identifying that reversal in the arch pattern, and that was probably around about the 11th of April that you did that. It hit 130.20 and started pulling back. That's number one. Number two is congratulations on having the foresight to take at least in options. You want to grab what you can as much as as quickly as possible, and then what you want to do is to do exactly what you do is half off, and the other half I would keep a trading stop on the price of EOG. But here's something that I don't often talk about. It's very difficult. I do know there are a couple of software packages where you can actually have a silent trading stop that you can put it in an option. I don't have it myself. I wish I did, because, boy, that would be the best way to play it. You're in, you're out, you know. But otherwise, you can see a profit disappear within, I couldn't even tell you fractions of a second, because it's milliseconds sometimes. So this is the way I'm going to tell you that I would look at this EOG trade. The weekly is still very, very, it's just a horrible chart. And I drew the left side, right side price time match that I was expecting a pullback towards the 114 to 112 area, and the time frame that I had was the week of the 24th of May. So I'm going to make the suggestion that half of the position that you still have, you keep. If there's a gap down tomorrow, you can take another half of your half position and just take it right off. But I'm actually going to suggest something a little different, and that is, if there is a gap down tomorrow, that you actually take the whole thing off, because you want to look at the 200-period exponential moving average at 118, exactly where it's trading right now, 118.76, as a bounce, a magnet, so that it's going to bounce above. It'll try to visit its friends back at 120.76. That was the low that we were looking at, the last low. And then you want to consider it as a short once again. So the suggestion is, congratulations, you've got your half off. The other half, I'd hold it for the day. It's a little tricky, but I probably would say you hold it for the day. And then if there's a gap down tomorrow rather than a gap up, which there could be, but if there's a gap down, grab that half, and then what I would do is dedicate the half that you've just taken off as positioning play, and you could put it back on somewhere between 120.20 and 121.20. And that's just a small position, because if you're wrong, it might bounce. It could even bounce. I don't think it's going to. But 124 to 125 are 9-period moving average lines that I'd be looking at. Now, here's the other thing. When you're in a position like this, I always grab the 120-minute chart, because if you're down at 4% or 5 or 6 or 7% in the slow stochastic, it says you're really close to a bounce, but the bounce should have been the V-shaped bounce that you got on the 5th. So this one's flattening out, and the MACD is still very wide. So I suspect that you are going to get a dip down. It might only be 2 points down tomorrow, or a point at the opening, or it could just be a big gap, and that's the reversal gap that says, okay, I'm done for the moment, but you want to re-enter. So my stochastic is saying you're in the area. If you looked at on the 20th of March, it stayed there, and EOG went even lower. That's really that's the pattern that you would like. But I wouldn't hang around too long in the second position, only because you've had a fabulous gain, and if you're able to get the gain tomorrow, you can't replicate that very often over the year. It happens a couple of times, and that's where you want to grab what you can, and you're out, and you think fresh for the next position.
Yeah, I was looking at, if you do like an ABC down of like a 1-to-1 Tom measurement on something like that, then it looks like the 1-to-1 ABC down gets you to like
about 116.
115-ish.
Yeah, right. So yeah, I agree. And so you can do, and you know what's fun? You can do this a couple of times, because you've picked. I don't want to use this analogy, but I will. Whenever I'm out driving on the highway, like I'm going to New York and back, I'm always looking, and I marvel at how many times, for instance, there were five cops out going to Brooklyn 2 weekends ago. Two on the Massachusetts side, and then two in Connecticut, and then one, I think, later on in Connecticut, on the other side, going towards Boston. And I just said to myself, everyone here is traveling at 80 miles an hour. There was one person that we all passed doing about 65, and it almost caused accidents because they were going too slow. And I'm saying to myself, I always think of the wild world of animals, where you got all these cattle or these deer or whatever it is, antelopes, and the lion picks out one. It could be the baby, it could be the laggard. Who knows why it's that one? And what happens is all the animals run like heck. Then they turn around, and they all stop and they watch. And that's what happens on the highway. Everyone kind of turns around to look, and then you go on at the same speed. So it has no effect or affect whatsoever, other than for that moment you think. It's like that victim, the one victim. So the point here is that in the options area, you want to grab whatever you can, because the longer you hold it, then the greater chances are that you're going to become that victim. You don't want to do that. Right. That's the one strategy. The other is looking out. If you were, say, to hold one and say, I don't care what happens, it could go to 5/10 or whatever it is, 0.05. But I think that this has the potential to go to, then you name a figure, 2.5 or 3.3. That's another way to do it. But I think that just getting it out the way and just watching the cop write the ticket and you're on your way, you weren't the one, that's the way to do it. So I'm going to recommend that you have that kind of strategy. And then the next, on the bounce, because a bounce could actually last long enough to really take out that premium. Right. You just have another strategy. You have patience to do the next entry points. Here's the other thing. If it bounces tomorrow, before you have a chance to exit. Oh, the other thing is, if it closes at the low of the day, then maybe take a little bit off in preparation for maybe a bounce tomorrow. Okay. In other words, you want to maximize the emotion of what you do in options. And to maximize it would be, if it closes at the low of the day, you're going to get the best premium, probably even better than if it opens tomorrow down a point or something. Okay. So good. Congratulations, right, Mark, and that's a fabulous trade.
Thanks. And then do you think that DMG is going to make, is it a peak F or is it an E?
Which one?
DMG. Chipotle.
CMG, I'm just getting it right now.
We were close to making one more little piece.
Yeah.
We missed it by 22.
So they come out with earnings very soon. I'm not sure when.
Week, I think Friday, maybe, something like that.
Friday?
Yeah.
I'm suspecting, based on what I'm looking at, that it's going to try to make a high-level consolidation. Okay. I'm thinking that it possibly could make a great trade in the options area, but I might ride it right through. I must check exactly if it's Friday afternoon or Friday afternoon. Oh, that's no good, because then we've got the whole of the weekend, huh? Hold off on that. I think it's getting to a point where I think it's going to pull back quite sharply, but I would hold off until Wednesday or Thursday before I did anything.
Okay, sounds good.
Thank you, Mark.
Thanks, bye-bye.
Folks, the Dow's down 89, S&P's down 12. We'll be right back after these messages at 877-927-6648. Still got time to take some calls.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman. Now we're looking at something interesting. Dow's at 107. S&P's down 14. Now I've got to say to myself, okay, go back and have a look at your Dow chart. Is there another notation that you can have? And I don't really see anything other than maybe it's a G. And the stochastic's at 91.95, even on a day like this. MACD's still good. It's unusual. Let's put it that way. Now, the weekly chart is in leg C, maybe peak C, and that's because I'm using the phantom peak. I don't want to get into that right now. But the S&P is in D, possibly a peak D. You've got the Qs also in a G/C, but the technicals there, same thing. Look, the technicals here are still holding at 89%. That implies that if there's a real strong smash to the downside, you will see the stochastic start to pull back very sharply, maybe go under 80%. But, it's talk about freight trains. Right now, at this particular point, you've had a move in the S&P futures that went from recently about 1575, I think it was, 1574.75, sploosh, down to 1568 something. So that's a quick move. So I don't know whether they're flushing out bears or whether they are teasing the bulls. All I can say is that based on my work thus far, my bias is still leaning towards saying that I think there are going to be nominal new highs coming up just to really put the squeeze on. I think it's going to be the squeeze. It might be the squeeze on the bulls, but I think it'll be a squeeze on the shorts. That final one that says, okay, I'm done. This is impossible. I can't short this market anymore. And at that particular point, then I think we start to go down, and we go down. It could be pretty sharp, because there are a lot of stocks that are now beginning to become very overbought. So that's my stance right now. And as far as the stocks, UTX I wanted to look at, because UTX is my pilot light indicator stock. It's done that beautiful stork leg formation with the golden egg. That's that body over there, made the neck head. It's the second one in succession. That's the one that I usually get a little nervous about. And what's most important about this is that I've got it as a peak C. So far I don't see any reason. I don't know how I'd be able to change that, because I don't have any. I don't have anything even close that I can use as a phantom peak. So that's the way I've got it right now, and that makes it very important as to the close today, because you would normally expect, I mean, gold smashes to the downside like this. Normally, you don't get gold smashing to the downside. In a circumstance where you've got gold plummeting, you would anticipate that the stock market also would go out, would pull back. One of the reasons being is that if there are folks that are on margin on the long side in gold, then they're going to have to pull money out of other areas. And that's usually what makes the general market weak in situations like this. So just to sum up real quickly, I don't have signals yet in my in the S&P, SPX.X, which is a little further along, absolutely officially in another leg D, possibly a peak D, to say that the technicals are failing. In fact, it's the very opposite, right? At this particular point, the technicals are actually holding very well, even with this move down. But it's that weekly chart that I'm going to spend a lot of time doing work on this afternoon, this evening. Why? Because 1553 is the 9-period exponential moving average, which has bounced off, and I'm anticipating within a couple of weeks, not only are we going to take that out, but it's going to turn into resistance for a period. So I'm going to be watching this real closely, and let's leave it this way: that if the Dow closes now it's down 135, the Dow closes down about 145 or more, then I've got to take this kind of pullback extremely seriously. Let's hope that for the upside, let's hope that there's a smaller close. Thanks for being here, folks. I'll be back tomorrow. Have a great day, and stay tuned for Larry Pesavento.